big proponent of the U.S. taking the worldwide lead in crypto. I think we have to bring it onshore and they use our best practices and regulation. I think that
there are moments in crypto when someone outside the usual echo chamber says something that completely changes the tone of the conversation. This week, that someone was Scott Bessent, billionaire investor, macro strategist, and one of the most respected minds in global finance. Now, if you're holding XRP, XLM, or HBAR, you might not think a traditional Wall Street veteran like Bessent has much to do with your digital assets. But here's the catch. His latest comments about stablecoins, digital finance, and U.S. policy reveal something much deeper. A shift that could redefine how value flows across digital networks. And that shift? It plays directly into the hands of networks like XRP, XLM, and HBAR. Scott Bessent isn't just another market commentator. He's a former chief investment officer of Soros Fund Management, the same George Soros who famously broke the Bank of England. When people like Bessent speak about macro trends, liquidity, or the future of money, institutional investors listen. Recently, Bessent highlighted something that caught the attention of the entire digital asset world. Stablecoins are not a threat to the dollar. They're a revolution in digital finance that could actually strengthen U.S. monetary dominance. That line alone sent waves through the macro community. Because what he's essentially saying is, the digital finance system isn't an enemy of the dollar. It's the next phase of it. And the infrastructure to make that system work, the rails that move value efficiently across borders, will be the real winners. Now pause for a second and think, what are XRP, XLM, and HBAR built for? Efficient cross-border transfers, instant finality, interoperability, exactly the kind of financial plumbing that Bessent says the world is moving toward. Bessent's comments weren't just about stablecoins. They were about the macro environment shaping digital assets. He emphasized that the United States is trying to position itself as the premier destination for digital asset innovation. That might sound like typical policy talk, but read between the lines, if the U.S. government and major financial institutions are aligning behind regulated digital rails, then networks that already have a reputation for transparency, efficiency, and real-world use are sitting on an opportunity that could redefine their valuation. And that's where XRP, XLM, and HBAR stand out. Because they're not meme coins, they're not hype-driven, they're infrastructure. They were built to move value, data, and digital assets exactly the way the next generation of global finance demands. So when Bessent calls stablecoins a revolution, he's really acknowledging that we're witnessing the merge between traditional finance and blockchain utility. A merge that these three networks are perfectly built to support. Bessent's background is in macro liquidity. He understands how money moves at the deepest levels of global finance. And what's fascinating is that his comments about interoperability and digital infrastructure line up perfectly with the technical goals of XRP, XLM, and HBAR. Let's break that down. XRP was designed for instant settlement between banks, solving the liquidity trap in cross-border payments. XLM focuses on financial inclusion and remittance efficiency, bridging fiat and digital assets for everyday users. HBAR provides fast, secure, and low-cost consensus, ideal for enterprise adoption and tokenized value flows. When Bessent talks about digital finance strengthening the dollar, he's indirectly talking about the systems that make those transactions possible, systems like these. Because in the digital economy he's describing, the winners aren't just the currencies. They are the networks that make value movement efficient, transparent, and compliant. Here's where things get interesting. Bessent emphasized that regulatory clarity and institutional adoption are coming sooner than most people expect. He said, the U.S. needs to be the premier destination for digital asset innovation. Translation: Washington wants the digital dollar infrastructure to be built inside the U.S. economy, not outside it. That means regulated digital rails and likely public-private networks will be at the center of that architecture. And guess what? Networks like XRP, XLM, and HBAR are already ISO 20022 ready, already enterprise compatible, and already integrated into payment ecosystems that governments and institutions understand. That's why his comments resonated so much. Because this isn't about speculation anymore. It's about infrastructure alignment, and the networks that already fit that framework are suddenly at the front of the line. And what Bessent did with his comments was light the first signal flare. He basically said what many in the institutional world had been whispering for months, that digital assets with real-world use cases are no longer optional. They're inevitable. For XRP, XLM, and HBAR holders, this moment isn't about waiting for hype. It's about recognizing that the macro world, the world of liquidity, central banks, and global finance, is finally starting to acknowledge what these networks were built for. When Scott Bessent spoke about the next phase of global finance, most people focused on the headline, stablecoins, US dominance, digital finance. But what he was really describing, if you read between the lines, was a complete rebuild of the global financial systems foundation, one that depends on speed, compliance, and real interoperability. And that's where XRP, XLM, and HBAR quietly step into the spotlight. Because while 90% of the market is still chasing speculation, these three have spent years building the digital rails that Bessent says will underpin the future dollar economy. Let's start with XRP. Bessent's whole point about stablecoins, strengthening the dollar, is rooted in one word: liquidity. He understands that a global digital economy can only function if value can move freely across borders, instantly, cheaply, and compliantly. That's exactly the problem Ripple's XRP ledger was designed to solve. For years, Ripple has been building corridors with banks, payment companies, and fintech firms, not to replace the dollar, but to make it move better. And now, with the rise of tokenized assets and stablecoins, XRP's original mission, to bridge currencies and provide liquidity between them, has never been more relevant. When Bessent says that digital finance could strengthen US monetary dominance, think about this. Every dollar-backed stablecoin needs liquidity pathways. Every global payment system needs cross-border interoperability. Every tokenized asset needs a settlement rail. That's what XRP does. It's the invisible infrastructure that turns a digital dollar into a usable global asset, bridging banks, payment processors, and financial systems that speak completely different languages. And if the US decides to position itself as the center of digital asset innovation, it won't reinvent the wheel. It'll use networks that are already proven, regulated, and efficient. That's where XRP quietly wins. Because Ripple's been preparing for this moment for almost a decade, from ISO 20022 compliance to direct partnerships with central banks exploring CBDC interoperability. And now, as policymakers finally catch up, it looks like the system Bessent described is the system Ripple has already built. While XRP works on the institutional and liquidity layer, XLM, Stellar, sits right at the center of financial inclusion. And that's another major theme Bessent hinted at. He said stablecoins can extend the reach of the dollar globally, especially in markets where access to banking is limited. Now pause and think about what that means. If digital dollars, regulated stablecoins, or tokenized assets are going to spread across the developing world, they'll need a fast, low-cost, accessible network to make it possible. And no network embodies that mission better than Stellar. XLM's infrastructure was designed to bridge fiat and crypto, to help everyday people send, receive, and hold digital assets without needing a traditional bank account. This is the very foundation of what Bessent described, not a threat to traditional finance, but an expansion of it through technology. And Stellar is already doing it. It's working with MoneyGram on USDC cash out functionality in over 180 countries. It's building remittance solutions that align perfectly with US Treasury's digital inclusion goals. And it's collaborating with governments and NGOs to distribute aid directly through digital wallets. Exactly the kind of on-chain financial access that global leaders are now advocating for. So when Bessent talks about making the dollar stronger, it's not just about institutions, it's about reach. And Stellar's network, designed for accessibility, transparency, and efficiency, is already proving how digital dollars can connect the unbanked billions to the global economy. That's why XLM's role in this shift can't be underestimated. Because in a world where digital finance merges with real-world policy, XLM is the practical bridge between financial power and global accessibility. Now let's talk about HBAR, because this is where the conversation moves from finance to infrastructure. While XRP focuses on liquidity and XLM focuses on accessibility, HBAR focuses on trust, scalability, and governance. Three things institutional investors like Bessent care deeply about. When he says the US should lead in digital asset innovation, he's not talking about meme coins or hype tokens. He's talking about enterprise-grade, auditable, and sustainable infrastructure, exactly what Hedera Hashgraph represents. BAR's strength isn't just speed, it's how it achieves consensus. Its hashgraph algorithm allows for near-instant finality and ultra-low fees, while maintaining a level of security and transparency that traditional blockchains struggle to match. And its governing council, made up of global giants like Google, IBM, Standard Bank, and Boeing, ensures that adoption doesn't just come from retail speculation, but from real-world utility and partnerships. That's critical, because the digital financial system Bessent described isn't theoretical, it's enterprise-led. The banks, corporations, and institutions that dominate global liquidity are already exploring tokenized assets, digital identity, and programmable money, all things that HBAR is perfectly positioned to support. Think of it like this. If XRP is the financial rail and XLM is the on-ramp for the people, HBAR is the data and infrastructure layer that connects everything, securely, efficiently, and at scale. So when Bessent says stablecoins could reinforce the dollar's power, he's indirectly describing a world where HBAR-like infrastructure manages the digital economy's backend, enabling smart contracts, data verification, and digital payments for both public and private institutions. The reason this moment feels so critical is that Bessent's comments tie all three together, XRP, XLM, and HBAR, like pieces of a larger puzzle. He didn't name them, of course, but he outlined the macro conditions that validate their existence. Here's the simplified view. The world needs fast liquidity movement, XRP. It needs accessible financial pathways for billions, XLM. And it needs secure, scalable infrastructure for institutions, HBAR. Together, they form the digital financial backbone Bessent says the US must lead, not by replacing the dollar, but by upgrading how it flows through the global economy. This is the alignment moment. For years, crypto has felt disconnected from the real economy. But now, with the convergence of policy, technology, and global finance, we're starting to see how these three networks are actually the blueprint for the system macro investors like Bessent envision. Here's what most people miss. When macro thinkers start talking about stablecoins, interoperability, and financial modernization, it's not a prediction anymore. It's an admission that the groundwork is already being laid. Just look around. US Treasury exploring regulated stablecoin frameworks. BIS and IMF studying cross-border tokenization models. Global banks like Citi, HSBC, and JP Morgan piloting on-chain settlements. All these efforts point to a world where value moves digitally, instantly, and globally, the same world XRP, XLM, and HBAR have been building towards since their inception. So while the noise in the market focuses on daily price swings, Bessent's message cuts through the chaos. The infrastructure race is almost over, the adoption race is about to begin. And that's the signal every long-term holder should be watching. If Scott Bessent is right, and the US really is about to make digital finance its next frontier, then the groundwork is already there, and the quiet networks we've been tracking might soon become the loudest winners of the next cycle. Let's talk timing. Because Scott Bessent's message wasn't just about digital finance, it was a warning about timing and positioning. He said, "Capital moves before policy catches up." That's the line that most people ignored. But it's the key to everything that's about to happen in crypto. Here's what he meant. Every major market transformation, whether it was internet adoption, housing, or energy, had a pre-policy window, a period when insiders positioned themselves quietly before regulations officially opened the floodgates. Right now, crypto is in that exact phase. Regulators are finalizing frameworks, banks are testing blockchain integrations, and financial leaders are aligning behind stablecoins and tokenized assets. But the retail crowd hasn't priced it in yet. That's why this moment feels like calm before a global liquidity reset. The infrastructure Bessent described, instant settlement, cross-border interoperability, institutional-grade compliance, it already exists. XRP, XLM, and HBAR are simply waiting for confirmation, the kind that comes when policymakers say, "Yes, this is the system we're using." And when that happens, the flood of capital that's been sitting on the sidelines, pension funds, insurance firms, hedge funds, will pour into digital infrastructure. Because once the rules are clear, the smart money moves first, And by the time everyone else notices, the market has already re-rated the assets at the center of it all. Let's start with XRP, because it's positioned like a coiled spring. Ripple has already built the rails. The company is working with institutions, central banks, and payment firms that represent real liquidity, not speculative trading. When those networks start running real transaction volume, it won't just be about hype. It'll be measurable demand. And that's where XRP's edge lies. Because the very moment global payment systems, or even a handful of major stablecoins, start using the XRP ledger for bridge liquidity, it creates a recurring use case. That's not short-term speculation. That's a utility-driven economy. And the thing about utility is this: once it's proven, it scales exponentially. So when Bessent talked about digital finance making the US stronger, he was indirectly describing a world that's already aligning with Ripple's architecture. It's not a what-if scenario anymore, it's a when. Now zoom out to XLM. His biggest advantage in this next phase isn't hype, it's reach. Because when the US starts integrating regulated stablecoins into global remittance systems, Stellar's infrastructure is already there to deliver. Imagine the US pushing dollar-backed stablecoins into emerging markets for trade and aid distribution, all needing a global network that can handle microtransactions, wallet conversions, and instant settlement. That's Stellar's entire model. And as these systems gain institutional support, the liquidity and transaction volume on the Stellar network could multiply. Each on-ramp, each remittance corridor, each integration into mobile banking platforms adds to XLM's fundamental value base. So for XLM holders, timing isn't just about market cycles. It's about infrastructure cycles. The more adoption grows, the more real-world throughput Stellar handles. And that's when its market valuation catches up to its actual utility. Now let's talk HBAR, because its moment tends to come after policy clarity hits. The Hedera ecosystem thrives when big players, banks, governments, and multinational corporations get official permission to move data and payments on-chain. And that's what the next phase of regulation is setting up. Bessent's emphasis on trusted systems and regulated digital finance directly aligns with what Hedera has been building for years: governance, accountability, and scalability for real institutions. So as soon as regulation transitions from theory to implementation, that's when HBAR shines. We're talking smart contracts for compliance, tokenized assets for banks, verified identity systems, all things that big players can't touch until the legal frameworks are finalized. That's why BAR's surge is a lagging indicator of institutional confidence. Once that confidence flips, adoption becomes a self-fulfilling loop. The more institutions build on it, the more validation the network gets, and the more capital flows into its ecosystem. What's crazy is that all of this could unfold within the same macro window. Think of the timing like this: policy clarity creates legitimacy. Institutional pilots create adoption. Liquidity expansion creates valuation re-ratings. And when those three overlap, when regulation, adoption, and liquidity move together, we don't just get a bull run. We get repricing events that rewrite what these assets are worth. That's what Scott Bessent was hinting at when he said the next global financial expansion will be digitally native. He wasn't predicting a trend, he was describing a transition phase, one that rewards those positioned inside the networks powering the shift. So if you hold XRP, XLM, or HBAR, this isn't about hype. It's about recognizing the macro timing window and understanding that once capital rotation begins, these assets won't need hype to move. They'll have adoption, policy support, and network value, the trifecta that drives real, sustainable upside. Bessent wasn't just talking about stablecoins or the dollar. He was describing the reorganization of global liquidity. For decades, the US dollar has dominated through trade, debt, and oil. But now that power is being restructured, digitized, and rebased on networks that can move value instantly. When he said, digital finance could strengthen US leadership, he wasn't guessing. He was outlining the next phase of how money, power, and information merge into one single digital layer. And that layer is being built by blockchain networks that can handle scale, compliance, and transparency, not hype coins, but serious infrastructure like XRP, XLM, and HBAR. Because what these networks represent isn't rebellion, it's evolution. They don't fight the system, They upgrade it. Look closely at the institutional positioning, and you'll see something subtle happening. Ripple isn't marketing XRP to retail traders. It's positioning itself as the liquidity provider for the next generation of global settlement. That's not a short-term move, it's a foundational one. The conversations happening now between regulators, banks, and payment networks mirror exactly what XRP was built for. Bessent's focus on liquidity, on making money move better, not faster, is what Ripple's been executing for years. Once policy alignment locks in, XRP doesn't need hype to move. It will be demand-driven. And the deeper truth? Once institutional settlement starts flowing through that system, XRP's price won't reflect retail speculation. It'll reflect network utility, like bandwidth pricing on the internet's early infrastructure. That's what smart money is waiting for. A bridge asset that earns its value through usage, not noise. If XRP is the bridge for institutions, XLM is the pathway for people. Bessent's remarks about digital dollars strengthening global reach echo exactly what Stellar's been proving in silence. That inclusion isn't a dream, it's a design. When the next wave of stablecoin expansion hits, whether it's USDC, PayPal's PYUSD, or new dollar-backed assets, they'll need global rails that are instant, transparent, and compliant. That's Stellar. And the more governments embrace blockchain-based distribution for aid, remittance, or even public programs, the more Stellar's role expands as the transactional layer of the digital economy. You can already feel the energy shifting. What started as an experiment in cross-border finance is turning into a core component of U.S. financial strategy. That's not speculation, it's structural evolution. And for XLM holders, that's where real opportunity lives. Not in quick price flips, but in being early to the system that will connect billions to the same digital economy Scott Bessent said would strengthen the dollar. And then there's HBAR, the one most people still underestimate. While the crowd looks for meme coins, the institutions are looking for systems that won't break under scale. That's why BARs focus on enterprise governance, verified transactions, and low-latency consensus makes it a long-term cornerstone. Bessent's vision of regulated digital finance can't exist without a platform that can host banks, governments, and corporates, all under one secure, auditable framework. That's what Hedera Hashgraph delivers. So as institutional adoption accelerates, from tokenized assets to CBDC pilots, BAR's ecosystem becomes more valuable, not because of hype, but because it's the infrastructure everyone can actually use. It's the invisible engine behind the visible transformation. If you step back and look at the bigger picture, the patterns line up almost perfectly. The macro signals, liquidity shift, digital adoption, dollar strategy. The infrastructure readiness, XRP, XLM, HBAR. The regulatory thaw, US Treasury and Congress moving toward digital asset clarity. These aren't isolated events. They're phases of convergence. And when convergence happens, when macro investors, financial leaders, and blockchain infrastructure all align, we get acceleration. That's the part no one's ready for. Because unlike 2021's hype cycle, this next run won't be led by retail traders or speculative mania. It'll be led by utility. And when adoption drives demand, when the systems Bessent described actually start moving real value, price discovery stops being emotional. It becomes mathematical. That's when XRP, XLM, and HBAR step out of the shadows and start defining how value moves in the digital age. So, if you're holding any of these three, XRP, XLM, or HBAR, this isn't the time to chase noise. This is the time to pay attention to structure. Because the next time liquidity rotates, it won't be random, it'll flow into the assets that already have infrastructure, policy alignment, and real utility. And that's what Scott Bessent's message really means. It wasn't just an observation about markets. It was a quiet roadmap for the next decade of digital finance. He's telling us the system isn't dying. It's being rebuilt. And it's being rebuilt digitally. So, if you believe in what's coming, if you see the alignment forming before the headlines catch up, now's the time to get ready, stay patient, and watch closely. Because when policy meets adoption and liquidity follows utility, we won't be talking about crypto anymore. We'll be talking about the new global financial system, and XRP, XLM,